So, just when we thought things were calming down a bit, boom, bond yields pop, markets drop, and the US-China chip fight flares back up. Hey everyone, it's Thursday morning, May 22nd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note, today's episode is sponsored by AMF Capital, Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Alright, let's get into it. The stock market yesterday took a pretty sharp hit. The Dow dropped more than 1.9%. That's roughly 800 points. The Standard & Poor's 500 slid about 1.6%, and the Nasdaq lost around 1.4%. And the catalyst? Rising bond yields. A weak 20-year bond auction around 1 p.m. really spooked the markets. Demand was low, and in response, yields surged. The 10-year Treasury yield jumped 11 basis points to hit 4.59%, and the 30-year? That went up to 5.09%, near its highest level since back in 2023. Now shifting gears, let's talk tariffs and retail. Target reported earnings and, well, it wasn't pretty. The company missed big and slashed its full-year guidance. What's interesting is they wouldn't say whether they're going to pass on Trump's new tariffs to consumers, something Walmart has already said they'll do. Trump, for his part, said retailers should eat the tariffs. Yeah, good luck with that. Speaking of Trump, he's got another headache. A massive tax and spending bill that's dividing his party and making investors nervous. The national debt is becoming a louder issue, and that's adding fuel to the bond yield spike. And then, just as trade peace was starting to look possible, the US and China are back at it. The administration's latest warning about Huawei and AI chips didn't sit well with Beijing. China says the US is undermining recent negotiations, which could put the whole trade deal at risk again. Oh, and Bitcoin? It touched a new record above $109,000 during the session before sliding back with the rest of the market. So yeah, a lot of moving parts, and none of them were especially comforting for investors. That's it for this morning. I'm Endrit Cela, and you've been listening to Capital Markets Quickie. Catch you tomorrow.